Greetings and welcome to the Superb Diamond Range podcast. I'm your host, Superb, broadcasting from Edinburgh. Today's episode is number 53, and it's an interview with Dinny about Bitcoin. Just so you know, there's a disclaimer in the show notes, just because we'll be talking about various financial topics today. Just to sort of bring Dinny in, obviously, he has a lot of experience with Bitcoin and runs a Bitcoin consulting business in Dublin, Ireland. So welcome, Dinny. Thanks for coming onto the show.
Thanks very much. Delighted to be here. Excited for this.
Brilliant. Yeah, so if you don't mind, Dinny, just for our listeners that may not have come across your content before, please tell us a little bit about yourself and your early career up until today and how you got started investing in Bitcoin.
Deadly. Well, I'll give you the shortened version, not take
That's a lot.
so we can get into the fun stuff. But I've been an entrepreneur since I was 8 years of age. My first business was collecting golf balls in lakes. I live around golf courses, and I've always had an infatuation with money, and that sort of stems from coming up in a family who struggled for money all their life, despite working hard. So it was always my fantasy as a young kid to get rich, to solve my parents' money problems, and I've had multiple businesses. I love entrepreneurship. All my businesses are in things I'm passionate about, so they're not really jobs. I talk about them anyway. And I suppose my early career was I'm really passionate about motorcycles, and I served my time as a steel fabricator and a motor mechanic through two trades, just to learn about those aspects and to fund my hobby of motorcycle racing when I was younger. Of course, being involved in motorcycle racing, I had many accidents, and I had one bad enough one where I damaged my back quite badly, a broken back, and that sort of shortened my motorcycle racing career for a time. I had to give it up, and that led me down. Surgeons said no more steel work. You can't be lifting steel. You won't walk again properly. You'll never run. All the sort of
Wow.
bad stuff that you hear, and that sent me down the rabbit hole of health and rehabilitation. And then after I fixed my own broken back, well, I didn't fix it with the aid of the surgeons, and I got involved as well with all the strength and conditioning and flexibility and nutrition stuff that I could do to help. I thought, wow, I feel amazing now. I'm super healthy. I'm super fit. I've more confidence than I ever had in my life. Maybe my new career, since I can't do my old one, would be just to teach others this experience. This is awesome. So that led me into the fitness business nearly 20 years ago, and still infatuated and fascinated with the fitness business. I still have ownership shares in a gym, although I don't actively work in the space anymore. And then from having success in that business, I was still of the mindset of I've got to solve these money problems. I've got to get rich. Money's going to be amazing. And inevitably, I had success in my businesses, and then I had money, and then I started to understand money, and then I started to understand investing. I love learning, so I'm always open to new things. And I went down the investing rabbit hole, and I've been investing for over a decade into everything. Not into Bitcoin a decade ago, unfortunately. I didn't fall on my lap, but investing into all the traditional assets, okay, like, property with rental and gold and stocks and other commodities and bits and pieces like that. And then eventually sort of stumbled into Bitcoin. And as I said, I was into gold before Bitcoin. So I sort of learned how money works before I
Yeah.
understood how Bitcoin works. Sometimes it's the opposite. When you learn about Bitcoin, you learn about money. But I understood all the problems with fiat money, as we term it, which would just be, government issued money like euros or pounds or dollars. I understood the problems with that and the debasement issue that the currencies are expanded or printed, and that
Yeah.
dilutes everything that we as shareholders in the currency, are owners of the currency, are people who save in the currency. That hurts us. So we must become investors. For the first half of my life, I never understood that, but I was a saver. I was trying to get rich, so I was very good at living below my means, but I was saving in a terrible asset, which was cash or currency.
Okay.
And then
Yeah.
as I became more financially educated, I started to understand you have to save in assets. And that led me into Bitcoin, of course. And like everyone, I had all the skeptical things and the misunderstandings and the reasons, why Bitcoin wasn't important. And eventually, with enough study and work, I realized I was dead wrong on all those things, and I embraced Bitcoin. And then, like fitness, excuse me, like motorcycles, Bitcoin became another passion of mine. And then, of
Yeah.
course, I decided, why not build another business around Bitcoin? And that's where Bitcoin with Dinny came from. We're in our fifth year now, consulting with people, helping them to understand Bitcoin, to custody their Bitcoin correctly, and to create plans to retire early by building a Bitcoin pension. So that's sort of my story there wasn't too short in the end, was it?
No, brilliant, very interesting. Yeah, so I heard you sort of mention the word skeptical, and one of my next questions was, and this even for myself, I'll try and get into it a bit more later about my views on it. But for someone that is skeptical or doubtful about Bitcoin, what would you say to them to try and convince them, or show them a different way, I guess, doing things?
Um, I suppose it this it is a journey into Bitcoin. It's not easy, and you can't sort of teach someone about Bitcoin in 5 minutes. You can just give them a little bit of information to get them curious. Um, like a lot of the skepticism must go away with the information that's out there now. In that we had Larry Fink this week only saying that he in fact was dead wrong about Bitcoin. He was the ultimate skeptic. This is possibly the most powerful financial man on the planet, and he has just said he was dead wrong about it. And you know, for me as a human, I don't have time to analyze everything. We have to trust in a lot of aspects in life. When I go to a restaurant, I have to trust the food. When I buy food off the supermarket shelf, I have to trust. So it's always trust. So this is a way we can save time, is by trusting someone else's judgment. And when someone of that caliber has came to that conclusion, me as a rational thinking person, that would be my signal amongst all the noise in Bitcoin of, okay, my accountant says it's terrible. My friend in the pub on the bar stool says don't trust it. But the world's most powerful man, who controls the largest financial entity on the planet, has just came out on mainstream media and says, I was dead wrong about this thing. Bitcoin is very important and it's going to play an important role in the future of finance. That would be the signal amongst the noise for me to say, okay, maybe time to buy a Bitcoin book.
Yeah, that was similar for me. I mean, I'd heard about, obviously was familiar with ETFs and things like that, and hearing about, crypto ETFs were coming along and, maybe already out in certain countries. And that kind of made me think that even the traditional investing world is kind of coming round to it. And as you mentioned about BlackRock, about their sort of view on it now has totally changed. So it's really interesting to see how the world changes over time, sort of thing. Um, so one of the things that I come up against quite a lot with investing, even traditional investing, I'll try and talk people into to get started in investing, and I might recommend to them, try the Trading 212 app, for example. And a lot of people like that aren't really into it struggle a bit. They might not know how to download the app. They might not know how to verify their account. And I kind of feel that there is a still a little bit of a barrier to entry for Bitcoin for the average man on the street. Although it's improved a lot, it's still quite tough for most people. Um, I mean, just to use an example from a few years ago, if you were to tell somebody that you had a podcast and, where can I listen to that podcast? What would I need to do? Where would I access it? Would I need to download a podcast player? So just from that point of view, what do you think?
The barriers to entry, well, it's certainly getting easier, a hell of a
Yeah.
lot easier. And with the creation of these, as you mentioned, the ETFs, which is exchange traded funds, and it's just a traditional sort of instrument that allows people through the traditional rails to get access to Bitcoin. So they don't have to go and set up a crypto account or any of this stuff. They can just literally make a phone call to their broker manager and say, I want to own some Bitcoin, can you do it? And it's done. So the on-ramps are becoming super easy. And similar to podcasts now, yeah, there's more sophisticated ways of finding them, but you can also just find them likely on YouTube and easier ways. And with people in Bitcoin, what I try and encourage them to do is, yeah, you can own a little bit of Bitcoin, but really it's learning about it. There is what will determine your success and failure in the asset is your understanding. And it does take work, and it takes a decent bit of work to get it right. Although once you have the information, which you'll probably go through, it's insanely simple to have success in Bitcoin. It's just be able to understand why all the assumptions that you'll make and all the things you think you should do with Bitcoin are all wrong, and you should disregard them and park them. And for some people, it takes 3, 4, 5, 6 years of mistakes before they actually learn these lessons. And of course, some people never learn them. But when people are trying to get into the asset or exposure to it, my recommendation and what we use here in our consulting offices, we use a broker for the on-ramp, because it's super simple. Rather than someone having a phone in their hand and they mightn't be super tech savvy, they're dealing with a human, they're dealing with a person. When you're dealing with an exchange, it's a faceless experience. You're just one of hundreds of thousands or hundreds of millions in Coinbase's instance of actual accounts. So it's very difficult. Whereas if you bring someone to a broker, it's a handheld approach. They have someone on the end of the phone, on the end of the email to sort of help them along with their journey. We also I'm over in Dublin here in Ireland. Revolut's a very popular app, and
Yeah,
it is
we
an
have
easy.
Revolut as
Yeah,
well.
a lot of
Yeah.
people have it on their phone, and it's a very easy way to get access to Bitcoin. And they've changed recently. Like years ago, I would have said no, don't touch Revolut because they never let you withdraw your Bitcoin. But now you can actually withdraw the asset. There is limits on it. I think it's 11 grand a month and that. But in terms of where to get started, well, people have Revolut, they understand how to use it, have at it with that. You just want a simple on ramp just to get a feel for Bitcoin, and then as your experience with it grows, generally your allocation starts to grow, either through the asset appreciating in value or that your conviction and understanding and you want to allocate more increases. And then you can move along the journey and find more sophisticated ways of cussing it and better on ramps than Revolut. But yeah, I'd recommend Revolut or a broker. If anyone looking for a broker, drop me an email hello@Bitcoin with Dinny, and I'll fire you on broker recommendations.
No worries. I'll put that in the notes for everyone. I went from being interested in Bitcoin quite a few years ago. As I say, I did have a previous guest called Randy from Bitcoin Venezuela. So I was interested in it at the time, and then I kind of lost a bit of interest. And even at one point, I kind of went through a phase where I was like, oh, all crypto was a scam. This has changed for me, especially more recently. But would you say to people with this type of attitude towards it, what would you say to them to encourage them to at least look into it or get started?
Yeah, well, it's pretty simple what I would say. I would say separate Bitcoin from crypto and study Bitcoin, because there's so much noise within crypto space. There's so much to go on. There's so much to try and get your head around. It can be very confusing. But Bitcoin is simple enough to understand, very simple to use. And if you separate, Bitcoin has a hard and fast rule. No human on the planet ever in the history of Bitcoin has lost money by holding Bitcoin for 4 years or less. Okay? Now, no other cryptocurrency has these statistics. Nothing. In fact, the majority, 99% of people who come into our space and decide, I'm going to invest in crypto, 99% are losing money. Okay? Because they make all the rookie mistakes. So I will encourage people to study Bitcoin, not because I have any religious alliance, just do Bitcoin only, just because these rules. I know if someone is new and they study Bitcoin, they understand Bitcoin, they choose to allocate to Bitcoin, they understand I have to be here for 4 years or more. And there's no guarantee that continues, but that's a pretty nice track record to go, well, no other human has ever lost money. Maybe I'm going to be the first person to screw this up. But in the history of Bitcoin, no human has lost money by owning the asset for 4 years or more, provided they custody it correctly and they don't make a mistake themselves. Okay, but in terms of market fluctuations, so now you're protecting someone. Now it's like, okay, and then you can layer in the volatility, how Bitcoin goes up and down, halvings, how it structurally works, how the issuance works, what sort of influences the price of Bitcoin, and all that stuff sort of comes later. But I think you protect people very much by encouraging them to go into Bitcoin. Now, the problem there is, and we all make this mistake when we come, Bitcoin is expensive. No matter what price it was, whether it was 100, 1,000, 10,000, 100,000, whatever price Bitcoin happens to be, it looks expensive compared to the other assets. So therefore we think that's too dear. I'm not interested in Bitcoin. It's already whatever price it is. And this one is a penny, or it's a tenth of a penny, or a thousandth of a penny. I have a much better chance with this smaller asset. But my little analogy on that, how I explain it to people is, if I try and sell you 50 euros, okay, and I say, I'll sell you this 50 euro note, I want a tenner for it. That's a good deal, because you're buying an asset for a tenner that's 5 times more valuable. If I see a bit of dog poo on the ground and I say, I'm going to sell you that for a 10,000th of a penny, in fact, I'll sell you 10,000 of them. Is that a good deal? So a lot of the times we don't understand the difference between the price of something and the inherent value of the asset, and the future value of the asset. So it's very different than price, and price unfortunately misleads a lot of people who come into the space. And also, I suppose, a lot of crypto, you see, it's like a flywheel effect. Because I work in the space, I talk, I've seen everything that goes on. A lot of these projects, tokens, they're spoken about on YouTube as if it's, an interview or gospel. But what retail people, the regular Joe on the street, fails to understand is that this is advertising. These podcasts are. They're being paid 10,000 to talk about that project, And people just don't understand the amount of wealth that's going into promoting everything that's happening in crypto. So it's not, a lot of the time people think they're being educated on YouTube. They're not. They're being marketed to and sold to. Versus Bitcoin has no marketing team. There's no one selling Bitcoin. There's no capital dictated on selling Bitcoin unless an individual company decides to try and sell their product. But it's a very different dynamic. And that's why I'll definitely encourage people, study Bitcoin. When you have the experience to study Bitcoin, maybe you want to get involved in other things, or maybe you don't. There's two ways to learn. You can learn by other people's mistakes. I like in the Retire Early Club that I have to show people all my mistakes. And like, this is what I done. I done the typical thing. You guys can save a heap of years by not going down this route. Because the irony is that Bitcoin will retire people early. I believe it will retire people early. It's going to hit all their financial goals. So they don't need to push out the risk premium anymore. Bitcoin has regulatory certainty. Nothing else has that. So it's just like, you're not getting paid for the extra risk. And sorry, I'm rambling on here, so I'll sort of wind it up. But once I get me going, Stephen, I go.
That's fine. One of the things you said there reminded me, I might be butchering this quote, but I think it's Oscar Wilde was like, everyone knows the price of everything, but the value of nothing, sort of thing. Just reminded me of that when you were saying that. So it's pretty good.
Brilliant.
You did sort of touch on it a little bit, but I know you sort of talk on your channel about, doing a 4-year apprenticeship where you obviously could start small and begin to accumulate more and more Bitcoin over time. And obviously this is like a learning as well. I like the way that you use the term apprenticeship, because you're more learning about how it works, the volatility, getting used to it, things like that. But yeah, why the 4-year? Is it just, do you think it's a good time to kind of start?
Yeah, possibly because I've done two apprenticeships myself, and then a Bitcoin one. So I suppose I've done 3 apprenticeships now. My reasoning for the 4 years on Bitcoin is, I suppose, the hard and fast rule I mentioned a couple of moments ago, that no human has ever lost money by owning Bitcoin for 4 years or more. And what sort of creates this 4-year cycle of Bitcoin is how Bitcoins are issued. Well, the first thing I learned about Bitcoin was there's only 21 million. There can only ever be 21 million. And that got me interested because, as I say, I've been an entrepreneur, and all entrepreneurs do is we try and manufacture scarcity and solve problems. Okay, I want my business, if it's in a similar niche, to be better than a competing business, because that makes me scarcer and more desirable. So I understood scarcity. So there's 21 million Bitcoin is all there can ever be created. Unlike gold, we don't know how much gold can be mined, although Bitcoin is like digital gold and so much more. But we'll be able to mine gold forever, and then we'll mine it in the asteroids. So although it's scarce, it's not finite. Bitcoin improves on scarcity and creates something that's finite. So how are the Bitcoins issued would be the next question. How many Bitcoins are out there? If there's going to be 21 million, how many have been created today? There's about 19.5 million created today. So there's another 1.5 million to be created. Now the way they're created is every 10 minutes, Bitcoins are created. As we create a block on the blockchain. Probably won't go into that because I don't think we need to when we're trying to analyze the price and the issuance and get an understanding of that. But every 10 minutes, Bitcoins are created. That's what runs the blockchain. That's the incentive for a Bitcoin miner to buy hardware, to run software, to pay people to run the Bitcoin mining operation, and to burn a load of electricity. Their incentive is they get paid in Bitcoin. Okay? At the moment, there's 3 Bitcoins. Just keep it simple. 3 Bitcoins created every 10 minutes. Okay, and they've got a market value, and that's what incentivizes miners to go and run this Bitcoin network, so I can send transactions to anyone, anywhere, and I can own an asset that's finite. There's a process called the halving, and this happens every 4 years, and it's when the issuance of Bitcoin is cut by 50%. So earlier on this year, there was 6 Bitcoins mined every 10 minutes. So every 10 minutes, 666. So that equates to, I think it's about 900 per day. Then we had the halving. I think it was April now, time's flying, but I think it was in April we had the halving. We have it every 210,000 blocks, which is approximately every 4 years. So every 4 years, the supply of Bitcoin is cut by 50%. Now you can imagine, I like to give a barbershop analogy. I don't know why. But let's say you live in a town, okay, and there's 12 barbershops. And this is just a crazy Dinny analogy. So this doesn't work in the real world, but Bitcoin doesn't exist in the virtual world. So you can do things that you can't do in the real world. So one of the barbers who owns one of the 12 barbershops says, you know what, I'm not as busy as I used to be. There's lads setting up barbershops everywhere. He happens to own a shotgun. He visits 6 of the barbershops and says, lads, I don't want you cutting any more hair. Close the doors, close the shutter. That's the end of it now. There's enough barbershops in this town, Dinny land. And 6 of the barbershops overnight go out of business. Well, the 6 that haven't gone out of business, they're now scarcer. So they're more valuable because they've more heads to be cutting. Okay, so the valuation on those businesses increases. And if 4 years later, that rogue lad, and he didn't get arrested, decides, you know, that was a good idea. I think I'll get rid of another 50% of these lads. Okay, so now he goes around to 3 of the barbershops, says, lads, I want you out of business, no more cutting hairs. Now there's only 3 barbershops. Again, the valuation of each of the 3 that remain increases, and on and on. So this is what happens. The supply of Bitcoin is constantly dropping by 50%. We're mining 3 Bitcoins every 10 minutes. In 4 years' time, we'll only be mining 1.5. In 4 years' time, 0.75. In 4 years' time, 0.375. Now, why that matters is because the price of something is dictated by the supply and demand. So if the supply is predictably going down, this is why I save in Bitcoin, because it's very predictable. I don't know how many euros they're going to print, but I know how many Bitcoin there'll be for the next forever, which is amazing. It gives me predictability in my wealth. So if every 4 years the supply of Bitcoin is dropping by 50%, well, the other influencing thing is the demand. What's the demand doing? If the demand just remains the same, the price is going to go up, okay? Because the supply is decreasing and the demand is constant, the price will go up. But we don't have that. We have the demand for Bitcoin increasing because every hour, every day, every month, every year, more people learn Bitcoin, or they learn how traditional money works and how that system is rigged against them. So they look for something else and they find something like Bitcoin. So demand's actually increasing. With the launch of the ETFs that we mentioned earlier, that has increased a massive demand for Bitcoin. They're only operating half a year and they've already bought up 1.5 million Bitcoin. So this is a huge demand, came out of nowhere. And some days these ETFs are buying 5,000 Bitcoin. There's only 450 being created a day and they're buying 5,000. And then you'd say to me, well, Dinny, where are they? They're on the shelves. Okay, so some Bitcoin are mined and are sitting on shelves. I can't remember the exact figures. There might be 1.5 million at this stage sitting on shelves in the back room. But when those shelves go empty, there's no way of replacing them. Bitcoin is not like a gold miner where you can go, price of gold's going through the roof, lads. Hiring a few more diggers. I want 100 more workers here. We're going to dig deep. We're going to work longer. We're making a lot of money. There's a gold rush on. What does that do? It increases the supply of gold, which starts to drag down the price. Bitcoin doesn't have that function. It's the first asset, the first thing, first commodity, that as the demand increases, humans cannot increase the supply. And that's, you know, to me, why Bitcoin is so important. It's the first asset that we've had that can do that.
Brilliant. Yeah, so I just wanted to talk about, and again, this may be the reason why I've kind of been on and off with Bitcoin over the years, but one of the biggest concerns has always been the safety of holding Bitcoin or any other crypto for that matter. You know, we've all heard stories of people losing their passwords and phrases or their computer, you know, breaking. How can we safely hold Bitcoin?
It's a great question. Again, with your apprenticeship, the way I like to structure it, if I'm dealing with people, is I do literally say, this is an apprenticeship, like, open a Revolut, get £50 of Bitcoin bought once a month to get your attention. As you're doing that, start reading some books, start learning, okay? So that as your competence and education is building, so is the value of your portfolio. Now, if you're going to go in and you want to make a bigger move on Bitcoin, my advice to you is do homework, make sure you're using, you know, a legitimate entity to help you with that journey, because my phone rings every week and people would not believe the amount of money that's lost, okay? Tens of thousands to hundreds of thousands to more, and it's heartbreaking, and it's all from people who just assume, oh, this Bitcoin thing, I can do it myself. There's so much scams out there, so you do have to be aware and be careful, and that's why, you know, we have a saying in Bitcoin, and Bitcoin maxis will all say it. And Bitcoin maxi is just someone who's like really into Bitcoin and it's the only thing that matters in the world. And, you know, I'm pretty close to that, I suppose, in all honesty. But I disagree in a lot of things. But they'll say, like, not your keys, not your coins. And that's all well and good. But if I get my father into Bitcoin, I say, not your keys, not your coins, Dad. You've got a self-custody. And I make him do that, even though he's never used the internet and he can barely turn on a computer or open Google. Like, he's probably going to lose the Bitcoin. I would have been much better off saying, Dad, you want to get into Bitcoin? You have a Revolut account on your phone there. Maybe just set up a little DCA to buy 200 quid of Bitcoin, or your $5,000 in Revolut. Stick that into Bitcoin. Revolut are going to mind it. Yeah, you have to trust Revolut, but probably better to trust them than someone who's zero experience. As we layer on, then generally what happens is we have a portfolio, it starts to become worth more. Now we start to worry a little bit more about it. Okay, it's sitting on this third-party platform, not naming any, I probably shouldn't name them, but I have no affiliation with them, any of them. But then people are like, okay, maybe I need to learn the self-custody of using a wallet. And then with wallets, this is like a hardware device. So it's basically like a USB key. So you can withdraw your private keys from the exchange or wherever you're keeping it, and you can custody it yourself. And that's not zero risk, though. It's not as easy as it seems. It's just that you've transferred the risk. The risk goes from what's called counterparty risk, meaning if I leave it with a company, the risk is that company doesn't give it back to me, fails, goes out of business. And that's happened in 2022. We had a heap of companies go down and cause a massive crisis in the price of Bitcoin, and an amazing opportunity for people who understood it. And the people who don't understand it or didn't have the education all ran away and missed, generational opportunity. So that's why education is so key. Following on from using a single SIG is a multi-SIG. This is where we specialize in. We specialize in helping people use multi-SIG, so no matter what happens, they can't lose their Bitcoin. If you use a single SIG, there's so many things can go wrong. Someone can break into your house, steal it, you can forget the password, you can lose the device, you can drop the device, you can break the device. You can have your recovery codes wrong. There's margin for error, and I don't like margin for error. Okay, margin for error is okay if I've got $5,000 on the line, but margin for error isn't okay if it's a more meaningful sum of capital for me. Like if I'm an investor and I own 500 grams worth of commercial property, I don't want to go out drinking on a Saturday night and wake up in the morning and go, feck it, I'm after losing the property. Oh, yeah, oh, man, I had them shots. I can't even remember what I done. Okay, but the irony is with your Bitcoin portfolio, you can do that. With your crypto portfolio, you can do that. You can make a mistake and it can easily be cleared out. Okay, so there's a journey into custody, and what I'd say to people is get learning. And I think people should learn self-custody, although I've probably scared people a little bit from self-custody. I do think it's worth learning, and I think you should learn before you have don't wait till you have a big portfolio that means something to you and now you're trying to learn self-custody with a big sum. Start off with your DCA account. As you're doing that, we start learning about self-custody, and from that comes multi-sigs. And in the future, Bitcoin is much easier to custody today in 2024, okay, than it was in 2020, than it was in 2016, and in 2028 it's going to be even easier than today. So entrepreneurs are solving these problems. They're making it better for us. So it's only going to become easier in the future to custody your Bitcoin.
Yeah, so just talking about obviously exchanges, is you can obviously buy the Bitcoin from the exchange, and you could either leave it there or you can, as you say, move it to a physical wallet or an online wallet. You sort of touched on it a bit there about sort of maybe starting small, getting used to having a wallet and moving money while you're dollar cost averaging. But would you say that sort of at the 5,000 mark, that would be a good time to really take it serious in terms of having the own custody of it, sort of thing?
Yeah,
Or it depends, doesn't it, on the person as well? Like
it,
100 might be a lot more to you then, and considering how much it will go up in the future, it might seem small, but it could be a lot, really, isn't it, when you think of it that way?
yeah, no, you're dead right, because every individual, I'm always like, is it a meaningful amount to you? Because to one person, 5,000 is betting at the weekend, and to another person, 5,000 is more money than they'll ever save in their life. So it really is individual. And that's why I think everyone should learn self-custody no matter where you are. In terms of how I think people should create their strategy, like I see Bitcoin as being a huge opportunity. I I don't, not that I don't think, but like someone can make a really aggressive bet on Bitcoin. We have people come into the office here and they're buying 500k of Bitcoin, a big company that people would know in Ireland. Like, so it's not a case that I think the way you get into Bitcoin is you start buying £50 a month. No, do the work on Bitcoin and allocate accordingly. The longer it takes you to learn about it, this is why we fast track people's education, because the longer it takes you to learn about Bitcoin, the more it hurts your investment returns. Because if Bitcoin with volatility is going up and it takes you 4 years to really learn about it, to really get your allocation that you should have got 4 years ago, there's a huge opportunity cost for that because the price of the asset is appreciated. And, you know, so there's no, this is how you have to start your Bitcoin investment journey. I just say to people, like, get educated, figure out how much you want to custody. There's different options with custody. The broker that we uses a multi-sig cold storage solution, so it's much better than an exchange. An exchange means if the exchange goes belly up, well, you signed the terms and conditions to say they could trade your Bitcoin, they could use it for liquidity, they could loan it, all the conditions we never read. With a broker, it's in different legal structure, the one that I use with my clients, because I want it that way. They cannot touch client funds, so should they go through a bankruptcy, all the assets remain intact. They can't touch them. Okay, they're audited every day. Someone goes to jail this afternoon, not if the assets are touched. Okay, not waiting on the company to go through a bankruptcy and then realize, oh, the Bitcoin's not there. And that happened with Celsius and Voyager and FTX and all the companies that went bankrupt. Is that when the companies went down, people realized that, oh, damn, I never read the terms and conditions. I didn't realize that if this company goes under, I go under with them. And so that's the difference with the broker model. And that's why I prefer the broker model. And even if someone isn't able to self-custody, I'm like, leave it there. It's a much better legal structure than so it's about educating and finding what works for you, because it's not a one size fits all. It's not you must use a multi-sig or you must use a broker or you must use an exchange. It's sort of what level you're at and what's your level of technical competence and how much input do you want to have, how much control do you want to have.
Brilliant. Okay, so for somebody that just has made up their mind that they just want to ignore Bitcoin, versus somebody who owns a little bit or a ton, how much are they missing out on by not even starting or looking at it? Sort of what's the price they're going to pay by not even giving it a chance or looking into it even?
Yeah, there's a lot there. I could talk a while on that, but I'll try and pick one or 2 points and be a bit concise, which is difficult for me. But Bitcoin's been the highest performing asset for the last 15 years. Okay, it's the highest performing asset for 3 years, and then it has one bad year. Highest performing asset 3 years, but when you layer that out, nothing has kept up with Bitcoin. And fundamentally, if I look out the next 15 years, it looks pretty similar, that nothing is going to outpace Bitcoin. Yes, there's going to be an individual stock that I can pick, but that's like trying to find the lotto ticket. By the time a retail person finds that information, they don't realize that it's been washed and traded and people got in way earlier than them. They're years late, even though they think they're early. But Bitcoin is an asset class. Even though it's just one thing, it's an actual asset class. Okay? And if this asset class, and I only need to pick one thing, is going to outperform everything, or has outperformed everything, and fundamentally with ETFs, okay, with Bitcoin becoming mainstream, because we're only just breaking into the mainstream. Remember, majority of retail, normal people would still say, you'll see it in the comments of all my podcasts and my social media posts, a lot of people are like, it's a scam, it's digital air, backed by nothing, government will shut it off. All the sort of nonsense arguments that were all debunked 8 years ago, but they're in the mind of retail people, the majority of the world, they all still exist as fact. They don't realize that Larry Fink has done a 180 on Bitcoin and has said he was dead wrong, and now he's actually trying to accumulate as much as he can. And this is a man who owns 10 trillion, who controls 10 trillion, the largest financial company on the planet. So most people don't realize that. But if it's going to be the highest performing asset, you need to own it. On the flip side, if you choose not to own it, and this is what I done for the first half of my life when I was trying to get rich, is I was a saver. But I'm not sure it was Robert Kiyosaki or where I heard it, or maybe I made it up myself, but savers are losers. I think it probably was Robert Kiyosaki. Yeah. And it means not that their personality is wrong, it's just that as a saver, you're punished. If you save euros and euros keep going down in value, how I explain it to people now is, every day we go to work, we have a bucket. It's like going to the tap and filling it up with water. Every day you go to work. And when that bucket's full to the brim, that's your pot. You can now retire. Okay? But in fiat, in the euro system, what they've done is they put a hole in the bucket. So although we're working for it, they're draining the water out. In that my euro doesn't buy me as much stuff. Like I'm paying €4.50 for a coffee. It was only a couple of years ago I was paying €1.50 for a coffee. So if I had €100,000 saved up a couple of years ago, that would have bought me a house. Today in Dublin, that'll only buy me less than 1/5 of a house. So I've lost 5 times my money just by saving it in the euro. So if you don't do anything, you're losing money anyway. And if I'm to say to you, and you're a rational thinking person, you've got 100 grand, well, just easy numbers for me because I'm not too good at math in my head. You have 100 grand in the bank. You're going to leave it there for 10 years. Best case scenario, that 100 grand is going to lose 50% of its purchasing power in 10 years. That means you're losing 50 grand just by parking it there, 50 grand. So what is the risk with investing it into anything? Okay, anything, because you're losing it anyway. If I say to you, I'm going to take the money away, or you can spend it, it's like, well, feck it, I'll spend it. You might as well, like, you'd even be better off buying lotto tickets, although that's a terrible investment, but it's better than just leaving it parked in the bank where it's going to be debased. And that's sort of how I try and teach people about how a regular money system works, and Bitcoin's the highest performing asset. And I'll just give you one more little story, because I mentioned my father earlier, and he's an engineer, a really smart man in the physical world. He'll build anything with his hands, solve any mechanical problem. So I obviously tried to explain Bitcoin to him many, many times. We had a lot of conversations about it, and he can't get it. And I don't think he'll ever get it. And the reason for that is my dad has never used the internet. My dad will tell you what the weather's going to be tomorrow. My dad will tell you what birds are due in, what birds are leaving, animals. He's very aware of the outside world, but the digital world, no experience, no understanding. So he can't understand it. He's never been on the internet. He doesn't have a Google account. So I'll never be able to get him to understand Bitcoin. Okay, but I knew he needed to own Bitcoin because they're old school, like me, and they had some savings from years of working, my mom and dad, and their savings would have been how normal people save, sitting in cash. And me understanding how money works years ago, I'm like that savings might to them be a lot of money, but it's not as much as it used to be 10 years ago. They're still thinking back in time. And I was like, this is a big lump now. This is our retirement. And I'm thinking, but in 10 years' time, that's going to have much less purchasing power. And in 15 and 20 years' time, they're going to lose the majority of that money by just leaving it in the bank. So I said, Dad, I want 5% of your life savings. Okay. And my reasoning was, we're putting in Bitcoin. My reasoning was, if I lose 5% of your life savings, it's not going to affect your retirement. It's going to be a pain in the ass. It's going to be a kick in the balls. Okay. But it's not going to mean we lose the house, blah, blah, blah. Maybe you can't replace the car for an extra 3 years. But it's really not going to have a large impact on the quality of life. It's not going to, there's a small risk here, but it's very small. It's calculated.
Yeah.
That 5% that we put at risk is now worth more than the 95% that we didn't touch. So that 5% allocation basically protected my parents' future, protected their retirement, protected the purchasing power of their portfolio of cash by me risking 5%. The downside was a kick in the balls, not too much risk. The upside was massive protection. We now have more purchasing power. We have 95% of the cash, and now we have a digital asset that's going to continue to appreciate and beat inflation a lot. So that's how I explained it to someone who had no concept or understanding of Bitcoin on just a risk basis on how having a small allocation can protect everything else.
Brilliant. For most people that go down the traditional route, at least in the UK and Ireland, of say property or pensions, how much slower would it be if they just put all their money into that as opposed to just focusing purely on Bitcoin?
It's a great question, and there's nuance to all the questions, so I try and try and break everything down. Like property is not a bad investment. It's been a good investment for all of my lifetime. Now I think there is a transition in that we're moving from physical property, okay, I could bang on bricks, to digital property. Bitcoin is digital property, so it's very similar, okay. The problem with property is, I'll just speak to where I live anyway, Ireland. We have a housing crisis. 3-bed semis are $500,000 now. I remember being a kid when I was trying to get rich and was like, if you just make it to a millionaire, you're set for life. You live off the interest. Now being a millionaire it's nowhere near. You're not set for life as a millionaire. If you don't have a house and a car as a millionaire, well, when you buy those things, you've got a bit of savings. You're certainly not set. You got to go to work on a Monday. So because we've a property crisis, shortage, property investors, by using property as an asset, are being punished. The tax is constantly increasing. Okay, the amount you can put the rent up is constantly increasing, but their inflation, their cost of running the property, that's running away. Their electricity has gone up, their gas has gone up if they're paying them, their maintenance has gone up. Okay, so property as an investment, plus it has a carry cost that every year, not only do you have all the taxes yearly and the maintenance and the physical work that has to be done, but because the property needs to be upkept, it deteriorates and it's stuck. If the local council decide to be really hostile towards you, they can literally take the property off you, so you don't really own the property. You just think you do. If they want to put a motorway through it, you find out who owned the property, who owned the land. So it's not as easy as investment as owning a digital property, because if I own a digital property worth the same as a physical property, I can move it anywhere in the world. Wherever I'm being treated best, I can move it there from my phone, possibly. Simple, easy. And there's no carry cost, there's no upkeep cost. It doesn't deteriorate. I don't get phone calls off tenants saying there's a leaky sink or the neighbours are making noise or any of that stuff, those headaches.
Yeah.
And then in terms of traditional pensions, like, I have a good bit to say about them, but I won't
Performance
get into
hasn't
it
been great.
too much.
Performance
But
for a lot of the, yeah,
no,
sort of,
there's so much horror stories
yeah,
about a traditional pension, and the way I see it, just to when it was pitched to me earlier in my entrepreneurial journey, it was just like, okay, there is a tax incentive, but I take all the risk. Someone else is making all the money right now, and in the future, hopefully, depending on what the current law is or how these guys manage my thing over the next 10, 20 years, I get some money back. And then when I understand money and debasement and the situation of debt, I'm like, the world doesn't look too good out there for these pensions. They've got some serious headwinds to navigate. These things are not these things are not as low risk as they're pitched to normal people. And then in the real world, I might be coming in the office here and I consult with people, and I meet people in their 60s and 70s, and all I get is horror stories of pensions,
yeah,
and younger, that pensions have gone to zero. And I'm like, okay, the unique selling factor is you're not smart enough to manage your own money. We'll give you a tax incentive, a tax break, and we'll manage your money. But nobody's retiring early off a traditional pension. However, when it was pitched to me, I was like, well, no, I'm going to learn to manage my money. And the beauty of Bitcoin is it's made that simple. You don't have to learn picking stocks. Bitcoin is very simple, just basic Bitcoin pension strategy. And therefore, and in terms of performance, the returns on Bitcoin, over the last 4 years have been 50%. If you want to go back, the returns on Bitcoin the last 12 years, 150%. Like these pensions, traditional pensions in Ireland go up at 7%. The cost of living is going up higher than that. So you're taking all the risk, someone's making money. And in terms of purchasing power, what you can purchase with that money, although the unit, my pension worth 50 grand, oh, it's worth 52 grand. But it buys you the same stuff. So you're taking all this risk and you're not actually getting rich. You're just keeping up with inflation at best. And that'd be my take on why. I'm not saying get rid of your pension, get rid of your property, but I'm saying if you have both those things, why not add another string to the bow, another iron in the fire, and have a Bitcoin strategy? I'm pretty confident, not financial advice, of course, but I can't predict the future. But from my fundamental understanding, to me, it's blatantly obvious that Bitcoin's going to outperform all these things and doesn't have the risk or the headwinds that these things have.
totally. That's a good, great point. Um, I probably kind of know the answer to this because I know that the when you own Bitcoin directly, that it's on the blockchain. But do you think there'll ever come a time when you can own Bitcoin directly, not just the Bitcoin ETFs or funds that might be on the London Stock Exchange or Nasdaq or what have you, in a tax shelter like a pension, like or an ISA? Do you think it will? Do you think it'll always be an after-tax asset kind of thing?
No, there'll come a time. I'm sure. I'm nearly sure in Australia they can own native Bitcoin and they can self custody it. I'm pretty sure. Like I work for a company called the Bitcoin Advisor, and we help people custody their Bitcoin. And I'm pretty sure some of the Australian guys will be talking to have that already. So it'll come.
Okay.
Everything is coming. Like you know, if Bitcoin is like the financial layer on top of the internet,
Yeah.
everything is going to come. Just like the internet entwined its way into every form of business and commerce and human interaction. Well, Bitcoin is going to intertwine its way into everything we're doing. So it's all coming just because it's not here now. The easy thing about Bitcoin is when all that's here, it'll be blatantly obvious that everyone must use Bitcoin. Bitcoin is the thing you save in. You don't need to use the stock market anymore. You don't need to use bond market anymore. You don't need to speculate on property. So property will come down in price because we have utility value of a house, but then we have monetary value that sticks on top of it because property is now an investment asset. That goes away. So it makes the world a better place, makes property more affordable because investors aren't speculating on property anymore because they're using digital property, using Bitcoin, which doesn't have a utility like living in it. So you're not driving up the price of it. So, I definitely think all that stuff is coming.
Brilliant. Um, as crypto is super volatile, which I realize is a positive for an accumulator, dollar cost averaging in, even more so than traditional shares and equities would be, obviously. How does it work when you are sort of drawing down Bitcoin or in the preservation stage? Would one strategy be, would you sell out of the Bitcoin into fiat and say leave the rest invested? How does that kind of the reverse of saving it, I guess, work?
How do you turn
Live off
Bitcoin
it.
into improving the quality of life or spending
Yeah,
Bitcoin?
yeah, exactly.
Okay, cool. The way I like to do this, because people say to me, Dinny, do you sell your Bitcoin to try and sell it up here and buy it back up in here
Mm,
and da. And how I answer that is no, like I've spent years learning how to be a better investor and how to invest. And therefore what I do is I separate my living expenses from my investable capital. Okay. And I don't need it to me it wouldn't make sense just to sell Bitcoin for the sake of selling it if I don't need money, because I'm selling an asset that's going up in value, increasing in purchasing power, and I'm going to buy euros with it, which is an asset that's doing the opposite. So there'd be no reasoning for me to ever sell Bitcoin just to put euros in my bank account, because now I've got a problem because I understand how money works. I have euros in a bank account. What am I going to do with them? They're losing money. I need to get them into something. What am I going to do? I'm going to buy Bitcoin. So it's a pointless experiment. But when it comes to time, okay, because I'm treating it as a pension, there will come a time where,
you can
uh,
spend with Bitcoin.
yeah,
Is that what you're gonna say? Or
there will come a time when I don't have an income, possibly, okay, where I'm not working in any businesses and other income generating passive assets maybe have gone away, and I decide I'm going to start spending my Bitcoin and living off my Bitcoin. And how I would draw down on that is, and one is, do you need to spend the Bitcoin? You don't need Bitcoin to be accepted. It's just like an asset, so I can just sell it. If I have an apartment, I sell that for euros, and then I can buy anything I want with euros. I don't need to be able to buy coffees with bricks out of the apartment, like.
yeah,
And Bitcoin is the same, so it makes no difference to me whether it's accepted anywhere or not. It doesn't affect how I can financially use the asset. But I call this my golden goose strategy, and this is why I encourage people: a 4 year strategy before you just go on an aggressive accumulation strategy for 4 years before you think you know anything. But when it comes time to draw it down, hopefully it's been 4 years, maybe it's been 14, maybe it's been 40, who knows? The way I would do it is, okay, let's say I've aggressively, and I'll just do simple numbers because, again, Denny's dyslexic. So let's say I have a million worth in Bitcoin, okay? And let's say it's 30 years' time. It's, sorry, 15 years' time. So Bitcoin has been in existence for 30 years. I can go on to Google, all right? Now, there'll be much more sophisticated ways to do this. Entrepreneurs are going to solve all these problems for us, don't you worry. But just in today's terms, simple fellow like me trying to work it out, I can go on to Google, I say, what's the average capital appreciation on Bitcoin over the last 15 years, over the last 5 years, whatever time frame I want. Let's say Google tells me Bitcoin is going up at the moment 18% a year. So I'm like, okay, I have a million in, say, equity in my Bitcoin sitting there. It's adding 180K this year. So I can spend less than that and I'm never going to run out of Bitcoin. Let's say I take out 100K. I'm like, okay, Dinny, you're living off 100K this year because your Bitcoin pension is worth a million and I don't want to run out of money. I'm not sure how long I'm going to live. I'm going to pull out 100K so that when I go back for my next withdrawal, the portfolio likely has increased even more. And I just call that a goose laying a golden egg. And it's a really crude example, but it's just a really basic way of, that's how you could start to spend your Bitcoin. If you accumulate it and you don't start picking out of it until the asset has grown to a considerable pot, the same as any asset, you know, we let it compound, we let it capital appreciate until it's of size that we can now start to withdraw without ever running out of money.
brilliant. That's good. Thanks for explaining that. It's very curious because I'd not didn't know much about how that part of it would
Yeah,
work.
Stephen, and one more way
Yeah,
just to get in is just to borrow against it. If you have physical
yeah,
property, you know, people have done this for forever. You just borrow against your property. You don't incur a capital gains tax. You're not giving up the
brilliant.
property, and you're
Yeah,
living off the debt. Again,
yeah,
should someone do that this year when they get into Bitcoin? No, the volatility will wreck you. But if you have a
yeah,
portfolio and you want to borrow against 10% of it, again, like my parents, well, what's the risk? If you get the borrowing wrong, you take a 10% haircut. You know, you're not back to zero. But over the years, so I've experimented with borrowing against Bitcoin in small loans and just seeing practically how it works.
yeah.
And again, I know entrepreneurs who are building companies to facilitate this and to allow us to have the buffers in place for the market volatility. So it's all the solutions are coming. I think the problem most people have now is they don't own enough Bitcoin. They need to figure out what it is, how it works, and how you can acquire it.
Yeah. Brilliant. Just wanted to get you have covered it a little bit earlier, but overall, what do you think about traditional pensions and what do you think's gone wrong with them? And obviously, there are a lot of things like government meddling. For example, in the UK, they recently keep moving the pension age from say 55 to 57, and who knows what it'll be when most young people retire. Things like state pension as well. Obviously, they're talking about means testing it, just different things like that. So yeah, just wanted to get your opinion on people that rely on a pension kind of thing. Just sort of.
Yeah. If I was younger, and this is because this is what I done, um, I would invest into myself rather than investing into a pension. Because if you invest into yourself, you like that's assets you can never lose. So when pensions were pitched to me, I was like, okay, yeah, that sounds all right, but no, I'm gonna pay the tax today. I'll have that extra few bob, and I'm gonna educate myself so I understand how the world works, whatever niches and things I want to understand, so I can generate more income, so I become more hireable, or I become better at building businesses if I want. Because the return I can get on my pension, on average, 6 or 7% per year. The return I can get on myself, exponential. I can lose everything. Everything physical can be taken away from me. I have the skills in here, in the grey matter, the small little pea that's in there, to get them all back. I know how to do it, and no one can take that away from me, and I'm not relying on anyone, so I don't have to trust someone managing my money. The second point on the pension is you are taxed, it's just tax deferred. Okay. And yes, as you correctly mentioned, the benchmark keeps moving. So if
Yeah.
you're 20, 15, whatever, 20 years away from a pension, I'd be like, not giving advice, but just what I would do, how I run my life is no, I'm going to control this myself. Give me the money, I'll pay tax on it now. I think I can make that money work more money by managing it myself. Now, not everyone wants to do that, and everyone wants to take responsibility for their money, and they do want to outsource. But the cost of outsourcing is you won't retire early. If you want to retire early, you got to do a little bit more work. And it's a trade. Like for me, it was like work hard for a decade so that the rest of your decades you don't have to. and
Yeah.
and and that was my journey in life, and that's exactly what I've done. And you know and in that decade of working hard, there was a period of, well, other people are getting this nice thing and having this nice thing or doing this nice thing, and I'm missing out. But now it's the freedom that I have now forever. So for me, it's worth that. It's worth deferring your gratification, getting stuck in, building yourself, and investing into yourself heavily, rather than outsourcing. But again, that's individual. I understand both sides. Nothing is ever black and white. Pensions aren't evil or anything. It's just that there's different things for different folks. But I'm sure a lot of your listeners, are trying to build something better for themselves, and want to get their hands dirty and get stuck in. I would say, particularly around Bitcoin, it's very easy. Finance, I remember getting into it first, and I'd be reading books, and every paragraph I'd be opening Google up to Google words, and then Google words similar to them words, because it's a different jargon. But it's like everything else, like a hobby. I'm into surfing. You wouldn't understand what we're saying if you're standing beside two surfers, because of the lingo or anything. Every sport,
Yeah.
hobby, and you just by being immersed in it, you pick it up. And even with crypto, I'm probably dropping words here. People are saying, "What are them?" It's just by being exposed to it, the language comes. And finance isn't that hard, and Bitcoin is going to disintermediate it, meaning it's going to make it so easy for people to do their own, to manage their own money. And that's the unique selling point on Bitcoin is, and again, that's why the financial industry traditionally is very much against Bitcoin, because it's like every piece of technology, it's insanely disruptive to them. There's a huge amount of wealth created off people managing other people's money, and if all that goes away, there's going to be hundreds of billions or trillions of capital saved to the regular Joe Soap, which is awesome, but not good for the traditional system.
Okay, great. So before we close, was there anything you can tell my listeners about your company and the services you offer? So,
Thanks. Yeah, I'll tell you a little bit
yeah.
about what we do. Bitcoin with Dinny, you can find us on Google, bitcoinwithdinny.com. We're on all social medias, Facebook, Instagram, YouTube, we have the podcast. I would just always warn listeners, be careful if you get a message from me saying, "Hi, how's your trade?" It's definitely not me. People impersonate me all the time. But if you want to contact us, always just go through the website. Or you can contact me through the social media. Just make sure it's the actual legitimate social media that you're on, and not an imposter. We run two basic products. I run consulting, where I consult with businesses and individuals to help them build their pension plan to retire early. We build around Bitcoin and crypto, and I also run a club. It's called the Retire Early Club. It's an online community It's fantastic. I've got 6, 7 courses in that to take people from understanding self custody, investment fundamentals, Bitcoin in depth, Ethereum courses, just everything that's going on in crypto, stable coins, all the stuff so people can have a broad understanding. Some people ignore, they just want to focus on the Bitcoin element, that's fine. Um, we meet on Zoom every 2 weeks. We have 7 WhatsApp groups on all different niches of the space. And it's just a great community because a lot of people, they're either learning themselves and none of their friends are into it. So it's about being in a network. Like we've almost 300 people in the community. So we've the same um, hive mind. I don't need to find out anything. I just open the WhatsApp group whenever anything happens, and people have already found all the articles. So it's just the power of community. And all my life and all my companies, that's I think one of my strengths is I understand we're better together. Okay, and you want to surround yourself with people who are doing better than you, rather than you being the best in the group, because then you're being pulled backwards as opposed to being pulled up. So we've got some people in the Retirely Club who have hit their early retirement goals, and then we've got people who are just starting off on their Bitcoin journey. But we all have one thing in common: we're all into Bitcoin. We all understand that money as we know it, we didn't understand it correctly, and we're willing to learn, and we want to succeed together. And we want to have a bit of fun doing it. We have a lot of business owners. We have a business network as part of that, where we meet as business owners and we sort of break down each other's businesses and give each other's tips. So there's just huge value. Again, it's just a community aspect of the Retirely Club. But yeah, enough waffle about me.
No worries. Well, obviously, I'll of course leave the online details online in the show notes about where people can find your content and your website. Any sort of final messages again for everyone? Just sort of.
Yeah, just to finish up, I would say um, Bitcoin is freedom. Okay, Bitcoin is a money you can own, a money you can spend permissionlessly, and a money with a fixed supply. All other forms of money are money you can't own, money you can't spend permissionlessly, and monies with unlimited supply. That's why I save in Bitcoin. Everything people likely think they know about Bitcoin is incorrect. Bitcoin changed your life in a really positive way. Yes, we have the financial aspect of it, but because Bitcoin makes you understand deferred gratification, which is a key skill of anyone who's had success in life, is deferred gratification. Learning that it means that your future, because Bitcoin allows you to understand that your future will be hopeful, it changes you in the present as well as changes your future. And I've seen that in everyone in the Retirely Club. They come in for the money, they get rich quick. Not all of them, but most people do. It's what attracts us into the asset, but it changes their demeanor. Suddenly they're healthier. Suddenly they're doing different work. Suddenly they're taking a different career. They're studying different things. It just changes as a person when you understand that your future is bright, rather than traditional world. For people who don't understand Bitcoin, it's just like, I can't afford a house. It's so hard. There's all these problems in the world, uncertainty. It's getting worse. It's a really, like, if you know that your future's going to be worse than your present, what are you incentivized to do? Over enjoy the present, consume. Who cares about your health? But when you understand that your future has the ability to be better than your present, it's like, well, okay, I've got to build towards this future. So Bitcoin does change people as you go down the Bitcoin rabbit hole. And the best thing I've ever done is study Bitcoin and get educated on Bitcoin, as opposed to just thinking invest in Bitcoin, it's going to solve my problems. It's by studying it and understanding a little bit of the philosophy as well as the technical on how it works, and then join the community of Bitcoiners, because you'll find there's some amazing people in these communities.
Brilliant. Well, thanks again, Dinny, for coming on. Really great to learn about Bitcoin, and hope the listeners got the same value I did out of it. So thanks again. So anybody listening, obviously, please remember to subscribe to the YouTube channel, and leave a review on iTunes. And obviously, you can catch us on X, or Twitter, as it used to be known, Super Diamond RA. And yeah, thanks again for listening. Peace out.